Good afternoon, ladies and gentlemen. On behalf of CL Synergy Limited and Equity Partners Limited, I warmly welcome you this afternoon to a presentation that we are having, virtual presentation to inform you, to give you an update and a detailed presentation on the upcoming IPO of CL Synergy Limited. The IPO will open on the 7th of April, and we will be raising 1.381 billion rupees. It will be in two tranches, 800 million of which will be in the form of new money, and 399 million will be a sell down. The share is very attractively priced at rupees 14 per share, which is based on the intrinsic value of 2159. It is a 54% discount, so it is very attractively priced. And my colleague Hansini will take you through the detailed presentation and will give you a detailed update on the numbers and the projections. We have with us this afternoon, it's my pleasure to introduce you to the head table. Roshan Silva is the Managing Director and founder of CL Synergy Limited. With him, on his left, is Janaka Udamulla, and who is the co-founder and handles all the financial related matters of the company. And we have Anuradha Suryarachi, who is an executive director, and on the corner is my colleague Hansini Badage, who will be making the presentation. If I'm to give you a very brief outline or outlay of CL Synergy Limited, ladies and gentlemen, without getting into much into the details or eating into my colleague's presentation, I would like to tell you that we at Equity are very, very heartened. We are excited, and we are jubilant in the fact that we have unearthed a gem of a company in CL Synergy. We have looked at the numbers. It ticks all the right boxes in the right places in terms of the price, in terms of the profitability, in terms of the industry that it is in, which you all know is a very lucrative industry, the freight forward industry. You know how the market has embraced that industry. So that box gets ticked very firmly when it comes to CL Synergy. The people. This is an excellent, it's a people's company. They have people who have been with them from the inception of 2005. It was set up by two young entrepreneurs then, who are here today together, and Roshan will tell you more about that initial setup of the company, of how two friends who went to uni together set this up, and today it's a huge success. Going public is only it's just another step, another stage, another platform, is a mezzanine in their journey to greatness. We're very confident. We're very heartened by when you look at how the company has come up in the last 17 years, and today we are taking it straight onto the main board of the Colombo Stock Exchange, and that's how ready the company is, ladies and gentlemen. If you look at the revenue, 66% of its revenue is dollar denominated, and you know what that it means today. We have not even taken the exchange, the devaluation and the positive impact it has on the bottom line of the company. We've not even factored that in on our valuation, because these numbers went to the stock exchange prior. So we're going still on those previous numbers and have not factored in the upside by virtue of the rupee devaluation. Over 70% of its cargo is export oriented, so that they're not too not too concerned or not too hassled or impeded by what is happening in Europe or any other external event, because over 70% of its cargo is outbound export oriented, and over 70% is in a lucrative shipping through shipping lines. Hansini will take you through the greater details. Once again, it's a pleasure and an honor for Equity to be associated with this IPO. Application forms will be available forthwith. So please do get in your applications in early. As I said, we are opening the IPO on the 7th of April, and we hope to close on the 7th of April itself. We will be using extensively platforms where you could electronic platforms through which you could make your applications. Please feel free to speak to your respective brokers or the company if you need further information on the application process. So thank you very much once again for your time this afternoon. And I'm confident and certain that the time you spend will be it'll be a good opportunity for you to enhance your investment portfolio by having a stock of this nature, of this caliber, in your reach. So may I now ask Roshan Silva to address you. Thank you.
Thank you, Ray. Good evening to everyone. And it's certainly a nice feeling to address this forum. And we at CL Synergy believed and worked towards this day. And finally, it has reached, and it's certainly a nice and a proud feeling. So first, let me thank all the staff of CL Synergy who are in various capacities, who made this possible, who helped the company to develop. And as a company, from the inception, we focused on few fundamentals. To have a motivated staff who would contribute to their best and providing personalized, unmatched solutions, with that to continue and have a loyal set of customers, and also always to bring innovative concepts on board. And again, as I said, it's to maintain a very personalized service. And also we have a unique work culture within the organization, with we maintaining flexible working hours and a flexible working culture with open seats, and to get the maximum efficiency of the staff, which we have practiced even from the pre-COVID levels. And also the fast decision making and greater interactions have been practiced from the start, which has helped the growth of the company. So the Synergy was started with only 13 staff, where as a group, we have more than 300 staff in operation right now. And also the number of associate companies we started together based on firm foundation of friendships, which have developed to cluster companies now, which is bringing a greater revenue to the company, and also in negotiations with the lines on the rates. So we consolidated all volumes and worked together. That has helped the organization. And also we have been recognized for our logistical services by number of shipping lines, then customer associations such as JAF and SlumUp, and also the Export Development Board, as well as the National Chamber of Exporters. So this history behind us, we are ready to now take on new challenges that stand before us. And also the focal points after the IPO is to expand into the regional markets, as well as to bring number of digital solutions. So we believe when we come together, we can create synergies, and these synergies will always be our competitive advantage to take us beyond boundaries. So with that note, to provide more details and the presentation, I would let Hansini take over from here. Thanks.
Thank you, Roshan. Let me take you through the presentation, detailing out what this opportunity has in for you. So we are looking forward to list CL Synergy Limited, which is a fast-growing, fully fledged freight forwarding solutions provider. At the IPO, the company is offering 91.5 million shares, and this IPO is structured in two parts. One part is the offer for a subscription component, where they will be issuing 63 million of new shares, that is almost 25% of the post-IPO shareholding, and they'll be offering to sell 28.5 million shares. The total IPO size is 1.28 billion, And out of that, 882 million will be raised as new funds that is coming into the company, and the offer for sale component is the 399 million. This is a listing on the main board of the Colombo Stock Exchange, priced at 14 rupees a share and with a pre-money valuation of 2.6 billion. The current shareholder is CL Synergy Holdings Private Limited, who owns 100% of the company. And the proceed raised through the IPO, which is 882 million through the new issue of shares, will be used for 4 different objectives. One is repaying debt, that is 212 million. Working capital purposes, that is 320 million. For regional expansion, the company particularly looks forward to expand into UK, US and the Far East. For that, 200 million. And to enhance their technological platforms, another 150 million. Some of the salient features of this IPO that I'll be taking you throughout the presentation would be the fact that CL Synergy has been a fast-growing freight forwarding solutions provider over the years. This offer is very attractively priced at 4.6 times forward PR compared to market rates, market PRs. The strong financial and operational track record the company boasts of, the significant denomination in the forex revenues, the upswing in the revenues and the profits post-COVID-19 helped by the favorable industry tailwinds. They are backed by an outstanding team of professionals and they have a reputed client base who are mostly export-driven. CL Synergy was started in 2004 with around 10 employees, and today it has grown to be a company with over 300 staff and 3.5 billion assets. The company is supported by 2 associate companies, that is Eagle Logistics and ASB Freight. If you look at the financial snapshot, as of the 10 months ended 31st January 2022, the company has posted 6.1 billion of revenues, 838 million of gross profits, 454 million of net income, 3.5 billion of total assets, and 696 million of total equity with the ROE of 65.32%. Like I said before, CL Synergy Limited, the company being listed, is currently owned 100% by CL Synergy Holdings Private Limited, who is the main shareholder. And the company has 2 associate companies. One is Eagle Logistics, where they own 50%, and the other one is ASB Freight, where they own 30%. Both companies are backed by another cluster of companies that engage in freight forwarding solutions. The company is a recipient of many awards and accolades. Starting from 2008, many times they've been named as the best supplier service provider to the export sector in the large category. This list of awards is short of one. Actually, yesterday, the company was awarded the Bronze Award for the Freight Forwarder large category at the National Logistics Award just yesterday. So their journey of achievements keeps continuing. Most of the company's clients are export-driven. For example, apparel, rubber, tea exports, perishables, coconut-based products, food, aviation, coir and mineral products. These are all export-oriented clients. Their only exposure is into the electronic item. Their only exposure to the import sector is in the electronic segment, and I will take you through more details later on. The company has 2 strategic partnerships, one with Joint Apparel Association and the other one with SLAMUP, that is the Rubber Exporters Association. They've been a preferred service provider for both the organizations. Let's look at the revenue composition of CL Synergy Limited. Almost 80% of the revenues are coming from sea freight, while 66% of the revenues are dollar denominated. If you look at the chart onto your left-hand side, 65% of the revenues are denominated in sea exporting freight income, and another 15% of the freight income are denominated in sea imports. So altogether, sea freight income is 80% of the revenues. The air freight revenues are 17% of the revenues. The outer circles are the revenues and the inner circles are the gross profits. So if you look at the gross profits, almost 85% is coming from sea freight, while 12% is coming from air freight. If you look at the chart onto your right-hand side, it shows the revenue exposure by currency. 65 to 66% of CL Synergy's revenues and the gross profits are denominated in dollars. And one thing to note is with our forecast, we haven't really factored in any gains from currency depreciation. So you need to understand that there is more upside than the numbers that you see here. 34 to 35% of the revenues and the GPs are rupee based. Actually, what you see is the 10-month average performance or the 10-month performance. As of the latest months, this dollar denominated revenue component has grown to about 75%. 70 to 75% of the revenues of CL Synergy are coming from export-driven clients. For example, 16% of the revenues are coming from rubber exporting clients who export to US and the Europe primarily. Then 15% of the revenues are coming from food exporters. Another 15% of the revenues are coming from textile manufacturers. Now, textile segment mostly employs CL Synergy for their import-related activities. However, as you know, textiles is a export-oriented industry. The demand for textiles in Sri Lanka are driven by exports. They have a 9% exposure to electronic items imports. So this is the only segment where they have a pure import orientation, only 9%. Another 9% of the revenues are coming from aviation product exports, where they have a long-standing clients who export to UK and the Europe, and another 8% of the revenues are coming from tea exports. Let me take you through the board. So ahead of the IPO, in preparation in terms of strengthening their governance, they have attracted many respected business leaders into their board. So the board is led by Mr. Dharmadira Singha, the chairman, and an independent non-executive director, a well-known personality who I won't spend time on his profile. And we have Mr. Roshan Silva, the managing director, and Mr. Janaka Udumulla, director of finance and administration, the two co-founders who have started the company many years ago, and both of them carry over 25 years of experience in the industry. There are three more independent non-executive directors who they have attracted to the board: Mr. Nirosh De Silva, then Mr. Sanjay Bandara, then Mr. Tilan Vijayasinghe. All are respected business leaders who are well known in the country. Then we have Ms. Shahani Kulatunga, Mr. Udar Vidanagamage, and Mr. Anuradha Suryarachi, three executive directors who have been with the company from the beginning. I will quickly take you through the valuation and the IPO metrics now. Like I said before, this offer is very attractively priced at 4.6 times forward PR multiples. Very attractive compared to the market PRs that you see today. The offer price is 14 rupees a share with a pre-money valuation of 2.6 billion. The total offer size is 1.28 billion, and out of that, like I said, 882 million will be new money coming into the company, where they will be using 212 million to repay some of their long-term debt, 320 million for working capital purposes, then another 200 million to expand regionally, and then another 150 million to enhance the technological platforms. Another 399 million will be offered through the offer for sale. And what's special here is, out of the 399 million, the selling shareholder or the parent company receives, 200 million will be coming back to CL Synergy Limited in terms of settling some of the related party loans. I will now take you through the forecasted income statement. As of the 10 months ended 31st January 2022, the company posted 6.1 billion of revenues with a bottom line of 454 million. By March 2022, we expect the revenues to grow to 7.2 billion with a bottom line of 577 million. They are well on track to achieve this performance in March 2022. If you look at the CL Synergy's profitability historically, they have what's special is they have remained healthily profitable even during the times that the freight forwarding industry was not doing so well. And the recent surge in these profits and the revenue in the interim period and continuing to March 2022 and beyond, one of the reasons for this increase in the profits is the fact that they have enjoyed higher freight rates just like everybody else in the industry, and that is what is driving the higher profits for the interim period. The gross and the net margins also accordingly have improved in the interim period. One thing to note about the forecast is we have been very conservative with the forecast without accounting for any gains from the currency, from the recent currency depreciation. Now I will take you through the forecasted balance sheet. The company has 3.5 billion of total assets, and then out of that 2 billion are trade and other receivables. In terms of the long-term debt, they have 207 million, and then in terms of the short-term debt, they have 1.7 billion. So that is almost 1.9 billion of debt. IPO pricing and the valuation. Like I said, the IPO is priced at 14 rupees a share, but the intrinsic value we have estimated to be 21 rupees and 59 cents. That is providing a 54% very attractive upside for the investors. The 21 rupees and 59 cents valuation has been arrived based on three techniques: a discounted cash flow model valuation of 19 rupees and 94 cents, a forward PR of 18 rupees and 30 cents, and an EV to EBITDA valuation of 26 rupees and 53 cents. The forecast assumptions have been very conservative, with a cost of capital of 15%, and then a PR valuation. For the PR valuation and the EV to EBITDA valuation, we have used a 6 times multiple. CL Synergy so far has mostly focused on the local market. Most of their clients are local, and the company has been growing organically. But post-listing on the CSE, they are aspiring to become a regional player, expanding into other markets and enhancing their geographies. This is the map of expansion for CL Synergy in other markets. They're primarily planning to expand to USA and then UK, which are buyer markets for them. And then they already have a joint venture in Bangladesh, but they are also planning to expand to Hong Kong, Myanmar, Vietnam, Cambodia, Thailand, India, and Indonesia. These are some of the sourcing markets. Globally, most of the freight forwarding companies have enjoyed escalating revenues, profits, and share prices. For example, Expo Lanka in Sri Lanka, they have seen a significant increase in their share prices along with growing revenues and profits. Expo is currently trading at a PR of 11.18 times. And then we have TCI Express, and then CH Robinson, FedEx, DHL, DSV, Kinanagel. Most of these companies globally have seen growing revenues and the profits, mainly due to the higher freight rates they have enjoyed. What's been happening with the freight rates and the industry situation, I will take you through in the latter part of the presentation. So all the peers are averaging to 20.25 times PR. And if you look at the CSE average PR is 10.63 times. So CL Synergy comparatively has been very, very attractively priced at 4.6 times PR. Now let me take you through the summary of the investment consideration that we've been looking at throughout the presentation. CL Synergy is a leading freight forwarding company with over 80% contribution coming from sea freight. They have had a strong financial and operational track record. 66% of their revenues are dollar denominated. 70 to 75% of the revenues are coming from export-driven clientele. They've been a fast-growing company, and then they have been benefited by certain favorable industry tailwinds recently. Currently, they are established in Bangladesh, and they're planning to expand into USA, UK, and the Southeast Asia, utilizing part of the IPO funds. They are a total solution provider in freight forwarding, backed by a cluster of companies. Their networks, affiliations, and the partnerships, and the very attractive PR of 4.6 times compared to market. Now I will explain to you what's been happening in the industry. IMF projects more optimistic growth forecast going forward. For example, in 2020, the whole world saw negative GDP growth rates due to COVID-19 pandemic. However, in 2022 and 2023, the growth forecasts are positive. Especially in the world, they are forecasting a 4.4% growth rate in 2022 and 3.8% in 2023. As the vaccination programs gather pace, most of the countries are coming out of COVID, but not 100%. What has been happening in the global sea and the air freight space? As you see in the two charts here, global sea and the air freight rates have been escalating ever since. Since January 2020 to February 2020, the sea freight rates have recorded almost 800% growth, 794% to be precise, but almost a 800% growth. Global air freight rates have seen an increase of 153% between the same period. What is the reason for this significant increase in the freight rates? So, what's been learned is that supply chain disruptions have been driving these higher freight rates. So during COVID-19 pandemic, you saw that lots of the ports and airports saw closures. At the same time, capacity became really constrained. So capacity constraint is something that lives on to be prevalent even today. Even now, if you try to get space on a airspace or the container space, it's going to be very difficult. And the surge in the global oil and the fuel prices also have put more pressure on the freight rates. So all these supply chains which are continuing has put pressure on freight rates. What is the outlook on the freight rates? Many experts like DHL, Drewry, what they forecast is these high freight rates are not going to come down anytime soon. These higher rates will continue at least up until end of 2023 or beyond that perhaps. One of the reasons is you see that the demand is picking up. In most of the airports and the ports, the activity is picking up as some of the countries are recovering from the COVID pandemic. However, there's a significant lack of supply, especially in the vessel supply, there is a huge shortage. So most of the new ships were not added to the stock during the COVID-19 pandemic. On one side, the shipbuilding cost has gone up because of the rising oil prices and the steel prices. On the other hand, most of the ship manufacturing was not happening. And because of that, lots of the new ships will only be delivered at least end of 2023. So up until then, these higher freight rates are going to continue. And in our forecast, we have very conservatively taken a slight 7% dip in the forecast for this year. And then beyond that, we have gradually forecasted the freight rates to drop by 20% to 20 to 15%. That has been very conservative, but the global outlook is that freight rates are not going to come down anytime sooner. Now I will take you through how the export and the import volumes have been performing in the Sri Lankan context, because this is a key revenue determinant of CL Synergy. The two charts that you see on the screen are export volume index and the import volume index. The red color line on the charts are the 2021 performance. And you can see that there's a blue color line and an ash color line, which are the 2020 and the 2019 performance. So in most months, the red color line has surpassed the blue and the ash. So this means in most months, exports and the imports both have recorded strong growth compared to 2020. So exports on average has recorded 29% growth, and imports on average has recorded 14% growth year on year in the year 2021. Despite all the import curtailments, December 2021 has seen one of the highest import volumes. What does the Sri Lankan freight forwarding space look like post-COVID? What the experts say is mostly the companies would need to be having more leaner, agile structures. At the same time, they would need to go beyond Sri Lanka and expand into other regions to compete with more mid-sized global companies. And at the same time, they would need to invest more in technology. So that brings us to the end of the presentation. If you have any questions, we are happy to answer. You can use the Zoom chat to direct your questions.
Thank you, Hansini. And as Hansini mentioned, please send in your questions via Zoom chat, and we'll be happy to answer them for you. We have Yaveen from Equity who will be coordinating it, and he will.
Thank you, Hansini, for that detailed presentation. We will now move into the Q&A segment of this investor forum. To address your queries, we have Roshan, Ray, Hansini, along with Mr. Jana Kudumulla, co-founder, Director, Finance and Administration of CL Synergy, along with Mr. Anuradha Suryararchi, Executive Director of CL Synergy. The first question that goes to the panel is, can you tell us a little bit more about your overseas expansion?
Yes, the overseas expansions, I mean, we are looking at in two sections. One is going into the sourcing markets, and the other one to focus ourselves in the buyer markets in terms of the sales developments. So what is in line is the first priority would be to capitalize our position in Bangladesh. And Bangladesh, we have already gone into a venture with a established freight partner there. So our first focus would be Bangladesh, which will happen within next 3 months, the first quarter of the financial year. And also that is we have laid our foundation in India. That again with the freight partner, so that we have plans to open up in 3 offices in India. That is focusing on Chennai, Mumbai, and the Kolkata. So on the other side, the USA would be the next priority. And the USA, we would have an operational office focusing a different section in the supply chain of our existing volumes. So that is, we would focus on the clearance and the distribution operation. So we have plans underway to invest in a custom house brokerage licensing firm, that is to buy out a small scale company, and to start with the existing volumes that we already have it and going into that sector. And then the UK, there are plans to work on a sales office. So all these 4 the countries what I mentioned, that's the Bangladesh, India, UK, and USA, which would take place within the first quarter of the financial year. And then, as Hansini explained in the presentation, so there are certain other countries lined up, but that would take place after the first quarter. Thanks.
There appears to be quite a few questions in relation to the dollar depreciation, the rupee depreciation rather. The question is, what is the impact of the recent depreciation on your business and valuation?
Yeah. Basically, the depreciation of rupee has a very positive impact on the P&L and the balance sheet of CL Synergy. To elaborate it a little bit more, the impact of profitability through the P&L and the impact of the balance sheet. Let me explain how we conduct the business and how we quote our prices to our customers. Generally, we quote our prices to our customers in terms of dollars. And at the moment, most of our cost of sales are also in terms of dollars. That's the direct cost of sales, but the general overheads are always in rupees. Now, what happens with the rupee depreciation, the same amount of dollar that we quoted before now yields a higher rupee amount. So our turnover goes up, and the gross profits in terms of rupees goes up, and that has a very positive impact onto the bottom line. So till about January, the dollar was about 203, and as Hansini mentioned, all our forecasts and the estimates were done at the rate of 203. But now we know that there is almost a 40% depreciation, and that should have a very positive impact onto our bottom line. Coming on to the balance sheet side of it, we have dollar-denominated assets and liabilities. We have a surplus of it. We have a sizable dollars in terms of deposits, and also we have a dollar receivables and dollar payables, where we have a net surplus, and that surplus, when you revalue at the current rate, we have a very positive impact onto our balance sheet as well. So altogether, with the impact of assets and liabilities and the revenues, the depreciation has a very positive impact on our business, which has not been really captured in these what I call financial valuations. So the valuation also will have a very positive impact after the depreciation.
Thank you, Janaka. Being in the service industry, how critical is your team?
As I mentioned in my opening remarks, the team is what really matters for any company in the service industry. I mean, that applies for our trade as well. So as I mentioned, this company started 17 years ago with staff of 13 or 12. So which has grown in, and then as I thank the staff, it's the staff who brought this company to this level. So and it matters a lot whether it can be sales or it can be other key functions of a forwarder, that's the customer service documentation side as well. So the customers depend on us, and the more and more customers are focusing on their core business, and the logistics is evolving from A to B now to 3PL, 4PL. So the scope of the logistician is expanding. So there are number of customers to whom that we provide the 3PL service right now, and directly through CL Synergy as well as through our associate companies. With that, I mean, everything becomes possible with a trained and a loyal staff. So that's something we as a company completely believe in. Thanks.
Thank you, Roshan. There's another question in relation to imports. It says, how do you cope with local economic stagnation and the lowering trend of import volumes into Sri Lanka? How about your exposure to domestic consumer goods import?
You want
I think Hansini very well touched upon that the combination and the composition of imports and exports. We are exposed to about 9% of our revenue to imports, which are in terms of electronics and electrical items. All other imports that we are at the moment handling are towards, again, driven towards the export industry, such as apparel. And we have not been exposed to any other consumable or other import items which have been now kind of come into a restricted list. And the customers that we handle imports are quite high net worth and large corporates, and we estimate those volumes will continue even despite these. There are certain restrictions when it comes to financing imports. So our exposure towards the import section that the question is being raised to is very minimal at the moment.
Thank you, Janaka. Another question, perhaps related to the depreciation of the currency and the positive impact. It says, how much of Forex do you hold as at date? And with the depreciation of the rupee, how much would add on to the bottom line if this is recognized? I believe that you are not in a position to quantify the exact figure, but just to further elaborate on the positive impact of the depreciation.
Certain numbers I think I will not be able to disclose, but if you look at what has been published in the prospectus, numbers up to January to end of January. So we have $3.5 million worth of dollars in terms of deposits, and roughly the net position of the debtors and the creditors would be in the range of 2.7 million. So that's the exposure that we have as we stated in our prospectus figures.
I believe this is the last question for the day. It is a message of congratulations followed by a question. It says, congratulations on your recent win at the National Logistics Awards, where you won the Bronze Award in the large category. How do you see your competition at this stage?
It is, if you look at with the large category, the other two companies that won the silver and the gold, which is being Inconspens and Expo Lanka, we are honored to be there. And also, with regard to the competition, I think we are all on the same pattern. That's why the last year or probably the last 18 months, the numbers have shown very good positive results to us. So we see the same trend continuing.
And also to elaborate a little bit, the award came in the National Logistics Awards, the ceremony, which was organized or created by SLAFA. And there it's not only based on the profitability or the turnovers, and it's also based on the number of other factors, your CSR initiatives, your contribution on the environmental sustainability, training and development contributions, and lots of other factors is considered, and which is directed at to uplift the standard of the industry. So as Anuradha mentioned, we are very honored to get that award during yesterday's event. Thanks.
There's another question in relation to the cash base of the company at the moment. Janaka, will you be able to provide some insight?
I think she must be referring to the working capital cycle and what is happening at the moment. So it has two different sides. One is a debtor days and the other one is a creditor days. The debtor days are like we have been managing in the range of 60 to 70 days at the moment. And on the creditor side, we see there's a lot of stringent conditions coming from our suppliers. And then we have met all these conditions, and at the moment it's ranging between 21 days to 30 days. So that's the cycle between payables and the receivables and the working capital. And just to touch upon, like basically once we increase our volumes and once we increase our turnover levels, so we have a requirement of additional working capital because of this the gap between the payables and the receivable days. So that's one of the main reasons that we are coming up with the IPO, is also to finance that additional working capital requirement that we foresee with the expected enhancements or the market penetration that we are planning to do.
Thank you, Janaka. I think the next question goes out to you as well. It says, 93% of Expo Lanka's operations are from global operations. How much is your direct dollar income?
As Hansini mentioned, up to January, our dollar income is 66%, but that's an average for the entire 10 months for the period. What we have been focusing since the COVID, the post-COVID, is to convert as much as possible towards having more dollar revenue. So we have kind of utilized few strategies towards it. We have been focusing more towards export sector to where we can have dollar revenues. Secondly, we have converted as much as possible our customers to pay us in dollars. So at the moment, we see they are on a kind of an increasing trend towards having more and more dollars in terms of revenue. So though the average is about 66%, so we have managed to go beyond 70% at the last stages. So coming on to the next financial year, I would think our dollar revenues in net terms would be higher than the average of last year.
Janaka, another question in relation to your income and profit. It says, what was the reason of the massive income and profit increase in 2021?
It contributes a few factors. Number one, in terms of our revenues, we have a bigger revenue than the previous year. The turnover growth is in the range of 240%. At the same time, since we've been focusing more towards the export sector, especially towards the US is our main market, which we have about average about 60% of our exports are export revenues are coming from US market. And we managed to enhance our GP margins as well during the last year. So it's basically a overall business growth, a business enhancement in terms of turnover that has helped the company to achieve a substantial growth in bottom line compared to last year to this year.
Thank you, Janaka. In terms of an insight into the gearing levels, a few of those questions have popped up.
Gearing level is again one of the main areas that we want to address through the IPO. At the moment, we have about 2.8 times of equity to the debt, but after the IPO, we estimate it will come below 50%. So basically, we will improve our gearing portion substantially after the IPO.
Thank you, Janaka. I think we can bring this Q&A segment to a close. On behalf of CL Synergy and Acuity Partners, we extend our sincere appreciation to all of you for joining this virtual forum and supporting the company to go beyond the boundaries of logistics. For further information on the CL Synergy IPO, the prospectus and application form, please visit www.ipo.clsynergy.com. We wish all of you a pleasant evening.